Good morning. I'm a professor in the chemical engineering department here at Columbia University, where my research group focuses on developing electrochemical technologies that are able to take low energy abundant molecules such as water and then convert them into energy dense, storable, low carbon fuels such as hydrogen, which is a major focus of what we're going to be discussing here in the session today. We have a particular interest in electrochemical reactors called electrolyzers, which are able to use renewable electricity from solar, wind, geothermal to split water molecules into oxygen and hydrogen. And when renewable electricity is used to make that hydrogen, we call it green hydrogen, which many in the field have recognized as being a really important way forward for decarbonizing many industrial sectors which are much more difficult to electrify. So even though my lab is focusing on new concepts, doing a lot of R&D, should also establish that hydrogen is here today. Globally, 100 million metric tons of hydrogen are produced every year. The global market is around $250 billion with many opportunities for growing. The thing is that less than 1% of that hydrogen is green hydrogen. There are a lot of carbon emissions that are associated with hydrogen that is made today from fossil fuels, such as methane. So here with us today is Jake Susman. I can think of few people better than Jake to talk about hydrogen and green hydrogen more specifically. Jake is a veteran renewable energy developer and former senior vice president of development at Electric Hydrogen, one of the leading manufacturers of electrolyzers for hydrogen production here in the US. He was previously the CEO and co-founder at Ambient Fuels, a green hydrogen project developer that was acquired by Electric Hydrogen last year. At Electric Hydrogen, Jake led efforts to deploy large-scale, low-cost green hydrogen project with a focus on those hard-to-abate industrial applications. Previously, Jake was also at Goldman Sachs, where he established Goldman's Clean Energy Investment Group, and he's also had extensive experience in the wind industry as well. So really great to have you with us here today, Jake. I want to next turn things over to you. Feel free to expand a little bit on your own background, but welcome your general thoughts on the state of affairs in hydrogen.
Thanks, Dan. Great to be here. Good to be with y'all, and thanks to Bruce and the team here at Columbia for organizing this awesome day. I'll give a quick disclaimer. We were clear about saying I'm the former SVP at Electric Hydrogen, so I'm here to represent my own views and not Electric Hydrogen's. But with that said, great company, great people, great tech. Follow them closely, please. And I also, by the way, would love to claim to have started the alternative energy group at Goldman. I was the wind guy back in the day. So and maybe starting there, the quick history is coming out of that group at Goldman, started a wind development company, sold it to EDF Renewables, and then after a quick dalliance in sustainability private equity, founded this green hydrogen DevCo about 5 years ago. And kind of the setup at the time, my friend Jigar Shah and a couple other good friends in the sector rightly pointed out that the beginnings of green hydrogen, and this was about 2021, really look a lot like wind in the early aughts, 2003, 2005 timeframe. Technology kind of coming down the cost curve rapidly, regulatory setup and the incentives starting to come into view and really favoring the tech. And most importantly of all, and this was what really got me jazzed, is that a third of the emissions that we need to abate are not going to be done through the electricity sector. Like, we need green molecules. And then kind of doing a little bit more work from there, it became pretty clear that either green hydrogen itself was going to be a decarbonizing molecule, or derivatives thereof, green ammonia, SAF, shipping fuels, etc. that was going to be the sort of go-to green molecule that kind of gets these huge sectors that don't use a lot of electricity to decarbonize. So that's really what got me excited. We built a DevCo. Somebody just yesterday in my world described it as Christmas in July when the IRA was announced in 2023. For a minute there, it looked like, you know, the time was right. It looked like the industry was going to take off like a rocket ship. And then we had a lot of sort of back and forth amongst different players in the sector around the rules for how we define green hydrogen. I think a lot of the relatively new entrant customers for the product kind of got spooked and said, you know, I don't need this headache. I don't need to like get in y'all's debates about this and that. And so as these things go, the customers slowed down with their demand. The investors got a little wobbly. And I would say we went from like rocket ship to now sort of, I'd call it planning for the future mode in the green hydrogen sector.
And Jake, without getting too much in the weeds, do you want to briefly mention what some of these rules or concerns were that slowed things down a little bit?
Yeah, it all comes down to a part of the IRA called Section 45V. That's a section of the tax code that gives a pretty interesting production tax credit for producing green hydrogen. And you get to still take all the wind and solar tax credits as well for the power that was used to produce it. There's even some other follow-on credits you might get to take depending on what end product you're eventually producing. So 45V was a $3 per kilogram tax credit. That's a lot. That's maybe a third to half of the sort of haircut on the cost that we needed in order to make the product attractive to these various customer groups in steel, cement, ammonia, jet fuel, all these different sectors. The challenge, though, Dan, was that there was a vice grip that was put on the way you actually define what is green. It came down to what were referred to as three pillars. The additionality was a critical one of proving that the electrons you were using were from a new renewables facility. Regionality, which said you have to be producing it proximate to where the green hydrogen and the electricity need to be produced in the same area. But the real tough one was hourly matching. And you had to really kind of perfectly line up the production of the hydrogen with the production of the primarily wind and solar power. And that I won't bore you with what the debates were about, Dan, but what it basically came down to was over about 15 years of renewable energy adoption, we eventually got to the point where companies like Google were saying, we really want to strive for 24/7 power, where that hourly matching kind of makes sense in those more mature sectors. But don't apply a mature sector standard to a brand new industry like this, or it can really stunt its growth.
So I think we'll probably come back to 45V in a little bit, and the climate impacts that hydrogen can potentially have. But I first was hoping that you can say a little bit more about what you see as some of the biggest opportunities for green hydrogen to have an impact. Any particular sectors that you're most excited about? And on a related note, how much is this going to take before things really ramp up until we hit that tipping point where we're at cost parity with fossil ammonia or fossil methanol or other applications?
Love the question, and it goes back to the customers, which goes back to the sources of demand. And in every renewable energy sector I've seen come up over the last, Bruce, 25 years, give or take, it always starts with some amount of regulated demand or mandates, for lack of a better word. In Europe, early on, it was a sort of EU level set of rules that said each country had to derive a certain amount of its power from renewable electricity. And then here it was the state level RPSs, that told utilities, like, you guys, you got to buy some of this stuff. The only place in the world that exists right now, Dan, is over in Europe under a set of rules called RFNBO, renewable fuels, other stuff. And that then has sort of subsidiary sets of rules, particularly for the shipping and jet fuel sectors. It also affects ammonia pretty heavily. So bringing that all the way back to your question, Dan, I would follow the regulated demand. I would kind of drill down on those particular sectors where people kind of have a have to part of the equation as the likely places that this is going to take off.
Mhm. Great. And so keeping the subject on geography, I wanted to bring the topic of hydrogen here in the U.S. To put it somewhat nicely, the current administration has been decidedly anti-renewables and also anti-hydrogen, in particular, green hydrogen in particular. Part of the Inflation Reduction Act had called for hydrogen hubs, 7 hubs across the country that would be these large pilot facilities for emerging and existing green hydrogen technologies. The administration this past fall announced that 2 of them would be canceled that were substantially focused on green hydrogen in particular. Along with that, we've seen a number of electrolyzer and energy companies either delay, scale back, or cancel renewable hydrogen projects. My question to you, is the US ceding leadership in green hydrogen to China, Europe, and other places that in many cases have doubled down? And if the answer to that is yes, how far behind have we fallen? How hard is it going to be to catch up?
Definitively, yes, we've fallen behind. Before I go to the how do we catch up, I would actually modify one thing you said there. I am no fan of this administration. I'm certainly no fan of what it has done to make developing renewable energy harder. I was actually pleasantly surprised that our $3 per kilogram credit survived the OBBB. The roughest cutback was, instead of having the credit for 10 years, we now only have it for 5. The rest largely stayed in place. And so, that's, I want to kind of put that out there because you'll hear me say, I think some people will say that green hydrogen didn't happen, or it's, like it's permanently on hold or something. I don't think that's right. I think there's still like a hard core of companies like Electric Hydrogen and other, pretty interesting US-based companies that are working away. I think some of the slowdown has maybe cleaned out some of the less serious players in the sector and brought the focus on the more powerful players. So, and there's still this regulatory undergirding that makes it possible. Sorry, long answer.
Silver linings.
Long setup. I think we have 2030 timelines in our minds as a sector, or the green hydrogen sector does, that this really starts to take off 2030 and beyond. So the question is, how much traction, how far ahead will China get between now and 2030? And I'm no expert on the technical side, and I haven't had much interaction with the companies over there, but I'm not hearing the best things about their technology and the scale up. So I don't think it's a lost cause. But boy, do we really need to start leaning back in fast. And the fact that renewable power has gotten more dear in this country, which is the prime cost driver of green hydrogen, is not going to make it easy for us to catch up so quick. So we got to really lean in and focus on it if we're going to win.
So you said it, levelized cost is extremely important in any of these decisions. But I also wanted to ask you about another consideration, which is on a lot of people's mind in recent years, which is energy security. It goes without saying that there's been a lot of turmoil in global energy markets that have resulted from the war in Ukraine and more recently the war in Iran and Middle East. We've seen really significant increases in the price, not only in crude oil, but natural gas. and then fertilizers as well, which are responsible for feeding a really significant fraction of the global population. My question to you is, in your view, how much should and will the pains from some of these recent price shocks accelerate financing and deployment of domestic green hydrogen production and ammonia facilities, both in the US, but also globally as well, where I'm beginning to see some traction and announcements?
So we mentioned the EU and RFNBO earlier. That set of rules is not in place for pure do-gooder reasons. That set of rules was put in place because there are countries across Europe that depend very heavily on natural gas and see fuels like green hydrogen as a way to reduce that dependency. I don't have the exact stat, but north of 95% of the ammonia in the world is produced with fossil fuels. And most of that's natural gas, and ammonia is used to make fertilizer, and fertilizer is used to make food to feed people, right? So if you're a leader in the European Union, kind of looking at Russia cutting off the gas and needing tons and tons of new LNG imports in order to make up for it, it's actually in the interest of your people, of your country, for you to promote more of these electrofuels like green hydrogen and eventually green ammonia. So I would say the geopolitical situation that's kind of driving the interest, I don't know, my current take is it looks like it's going to continue. So that ought to mean more favorable policy, more companies making rational decisions about things like feeding people.
Thanks so much for the insights. So another consideration besides costs, energy security, is the climate impacts of hydrogen energy. There's certainly a lot of countries in Europe and elsewhere that are thinking about hydrogen as a key vehicle for decarbonization. There are many people in this room here at Columbia who care a lot about climate as well. And one of the major stated motivations for green hydrogen is that it has low greenhouse gas emissions. That being said, our electrical power grids currently contain relatively high carbon intensities, and there are concerns about indirect global warming effects associated with incidental leakage of hydrogen. How skeptical should climate-aware investors be about the green hydrogen pathway truly being an answer or holy grail to some of the aforementioned hard-to-abate energy sectors?
To me, some of this is pretty simple supply demand. And again, if a third of the emissions that we need to abate need a molecule, not an electron, some technology's got to step in and eventually meet that source of demand. So maybe more sectors will electrify than I'm currently assuming. But if that means going from 33% to 20, that's still a lot of abatement that we need, right? So, look, I think I may have lost your question a little bit, Dan. But to me, the bottom line is to kind of like watch the fundamentals on this, and we've got to have certain of these sectors continue to exist and eventually decarbonize, and they really don't have another pathway other than these fuels.
I agree with that.
Yeah.
These are hard to abate sectors for a reason. It's not going to be easy. In my personal opinion, I think there's absolutely a pathway there. So with that, we're out of time on this session, but Jake, thanks so much for the great discussion, and thank you all for your attention today.
Thank you, guys. That's it.